Vice Chair Representative Hoheisel is in person. Ranking Minority Member Representative Hsu is present in person. Representative Avery is present in person. Representative Baker.
I'm here.
Thank you. Is remote. Representative Bergkamp. I believe I missed him last week, so I apologize for that. Representative Day.
I'm here, thank you.
She's present. Representative Donahoe. Representative Finney.
Representative Donohue is here.
Thank you. I have Representative Donahoe is remote, as well as Representative Finney is present remote. Representative Kessler is here in person. Representative Lynn is here in person. Representative Neely.
I'm here.
He's present remote. Representative Poskin. Oh, I'm sorry. Representative Neely is present in person. Representative Poskin in person. Representative Samsill.
Here, remote.
Thank you. Representative Topliker is present in person. Representative Wassinger is present in person. Representative Weigel is present in person. Thank you.
Gail Finney is here too. Sorry.
Yes. Thank you, Representative Finney. We did get you as present remote.
Okay, thank you.
Thanks. Our next item of business is request for bill introductions. Do we have any bill introductions? No, I have two that I'm going to introduce today. The first one is RS 0647, and it's kind of a backup bill for a bill that should be coming in here before long, but this is a Rural Opportunity Zone sunset extension for 2 years. The Rural Opportunity Zone legislation expires June 30th of this year, and this will extend it for 2 years. It's introduced as a bill on, I guess, my behalf in order to have a backup in case our RAW's tweaked legislation runs into any difficulty, but that should be coming hopefully maybe on Wednesday, or if not Wednesday, then the following Monday. So this is RS 0647. The second one that we have to introduce came our way, sent from the tax committee to us to introduce in here, and it's a bill from last year. It's the establishing the first-time home buyers savings account act relating to financial institutions, income taxation, and so first-time home buyers savings account. It's RS 21, or it's 21 RS 0664. So we're introducing that, and we will have that to work on. And I know of probably 2 to 4 more bills that will be coming besides the RAWS one. And most of those, several of those will be in the rural development portion of our committee. So those two, Rich, did that give you the information you need? Okay, thank you. So we have that, and we still have until the 12th, I believe, for individual introduction of bills. Our next item that we're going to have is a presentation that I'm looking forward to, and we get a chance to I believe that Commissioner David Herndon joined us in the audience last year as a fairly new commissioner. As I remember, he came in 2019, but this is our first real opportunity for our committee to get to have Commissioner Herndon appear. He's the bank commissioner for the state of Kansas, and he has a presentation that he's going to give us kind of on the state of, it's going to be an overview of the office of the state bank commissioner, and they do a lot more than a lot of people believe that could go on in that office, but they cover a lot of territory. Commissioner Herndon came to the office as out of the banking industry, over 30 years of experience, 22 years as president and chief executive officer of a Kansas City, Kansas bank. And he started his banking career earlier than I started mine. He started as a high school senior, working part-time as a teller at a Kansas City, Kansas bank, and then went on to Baker University and went to the Banking Administration Institute School of Banking at the University of Wisconsin, a school that I attended back a number of years ago. He's been a past chairman of the Kansas Bankers Association, so lots of real-life experience Commissioner Herndon brings to his position. So it's my pleasure to welcome for us to get a little background on the Office of the State Banking Commissioner and maybe kind of the state of banking today, and give us a chance to ask some questions. Commissioner Herndon, welcome to the committee. It's a pleasure to have you here this morning, and I appreciate you being willing to meet with us on a Monday morning.
Thank you, Mr. Chairman. Good morning, Mr. Chairman, committee members. My name is David Herndon, as you just heard. I am the Kansas State Bank Commissioner, and it's my pleasure to appear virtually before you this morning to give you an overview of the banking industry in Kansas. The Office of the State Bank Commissioner, or the OSBC, was created in 1891. We are the agency that regulates all state chartered banks and trust companies, mortgage businesses, supervised lenders, credit service organizations, and money transmitters that do business in Kansas. Our mission is to ensure the integrity of regulated providers of financial services through responsible and proactive oversight while protecting and educating consumers. I have prepared and delivered handouts of my presentation this morning and appreciate the committee allowing me to appear remotely. And I will refer you to that handout now. On page 2, the handout identifies the 5 divisions that compose my agency. Most of my comments today will address the first 2, the Division of Banking and the Division of Consumer and Mortgage Lending. The Division of Banking and Trust performs safety and soundness exams, compliance examinations, and IT or information technology exams on all Kansas State chartered banks and trust companies. The Division of Consumer and Mortgage Lending, or CML, licenses all non-depository entities conducting consumer lending activities in Kansas and performs compliance and IT exams on those entities, assuring compliance with state and federal laws. The OSBC currently employs 104 people with 3 current openings for which recruitment is underway. Of the 104 employees, 77 are financial examiners or reviewers and managers for the examination function. Our agency is 100% fee funded through bank assessments and CML fees. We receive no funding from the state's general fund, and our 2021 fiscal year budget totals $11.1 million. I would refer you now to page 4 that highlights the banking division's supervisory duties. As mandated by statute, we examine all state banks and trust companies at least once every 18 months, some more frequently if they are of significant asset size or are considered problem banks, banks that have been or are operating in unsafe and unsound or are non-compliant with state or federal laws, is what I refer, or the industry refers to, as a problem institution. We have strong relations with our federal counterparts, allowing us to alternate safety and soundness exams with the Federal Deposit Insurance Corporation and the Federal Reserve Bank. Further, on some occasions, we will conduct joint exams with these federal agencies. There were 187 Kansas state chartered banks as of September 30, 2020. Today, there are 186, and I'll speak more of that in a minute. 35 of those banks have active trust departments in addition to the 10, now 11 because one opened on January 2nd, standalone trust companies that are chartered in Kansas. The combined total assets of Kansas state chartered banks and trust companies now exceeds $100 billion. That was as of September 30. December 31, 2020 numbers are not yet available, as year-end call reports of condition were filed in January and will be compiled this month. Page 5 details how we divide the state geographically into 3 regions with the goal of balancing both the number of institutions per region and maintaining the regional knowledge of the state's varied economies in which our institutions operate. Safety and soundness examinations are conducted using the Camels supervisor rating system, and that's on page 6. The system is applied to every bank and every credit union in the United States, as well as outside the United States by various banking and supervisory regulators. Camels is an acronym, and as on page 6, you can see that what the Camels stands for. Bankers, in my opinion, should always strive to be a Camels 1 rated bank. As page 7 shows, that a rating of 3, 4, or 5 carries the definition of being a problem institution. And various levels of regulator imposed enforcement actions are typically enacted against problem banks. I'll provide more detail on the ratings of Kansas banks in just a few moments. But first, I refer you to the next page that demonstrates 2 important trends affecting the industry. The United States operates a dual banking system. National banks are chartered by the Office of Comptroller of Currency. State banks are chartered by the individual banks. I've included national banks in this information for demonstration purposes. The top graph, or top scale, breaks down the state chartered banks with those that have voluntarily been chosen to be members of the Federal Reserve Bank, the number of national banks headquartered in Kansas, and the movement between the charters changing from national to state. The bottom graph indicates the total assets of state chartered banks, as well as the average and the median size of the total assets. Notice the trend of the number of banks that have declined in the past 5 years. This trend is not unique to Kansas. We went from 217 banks in 2016 to 187 as of the end of the 3rd quarter of 2020. It's a nationwide trend that's been ongoing since the late 1980s. It's expected to continue, and Kansas will not be exempt from the decline. However, as noted in the bottom graph, the bank asset totals and the sophistication of the banks have grown just as dramatically in the opposite direction. So the OSBC is regulating fewer but more complex institutions engaged in many more fields of business than they did in the past, putting more demands on our staff's time and talents. So maintaining a competently trained and tenured staff is critical to our mission, our success, and to Kansas. I think it's important to note here that some of the 2020 asset growth was rapidly fueled by the economic recovery actions enacted last year through the CARES Act in response to the COVID-19 pandemic. Specifically, the Payroll Protection Plan, or the PPP, that Congress authorized, and operated in phase one until August of last year. Phase two has just opened in the last couple of weeks. But my comments will be about phase one. In such a short period of time, PPP loans resulted in banks expanding their balance sheets, and that was reflected in the September 30 call reports. Those balance sheets will shrink back down a little bit to normal or to historical levels as those PPP loans are forgiven or move off of the bank's balance sheets. But I'm proud to say that to report that eligible Kansas state chartered banks were very active in phase one of PP lending, helping and in some cases saving Kansas businesses to keep our state's economy from further pandemic disruption. When last year's PPP program ended in August of 2020, Kansas lenders, primarily banks, had generated nearly 52,000 loans totaling over $2.8 billion. Page 9 discloses the top 10 state bank lenders in Kansas by the dollar amount of loans extended and the percentage that those loans made to their total portfolios and the impact on the bank's balance sheets. Moving to page 10 and 11, these two pages demonstrate graphically the decline of the number of banks offset by the increase in bank and trust assets since 2008. When the Great Recession began. Page 12 illustrates the range of asset sizes of our Kansas state chartered banks. Our largest asset size bank in Kansas as of the end of Q3 in 2020 was Cross First Bank out of Leawood at $5.5 billion in total assets, while the smallest was the Walton State Bank in Walton, Kansas, with less than $10 million in total assets. So there's a huge range of bank sizes in our state. Pages 13, 14, and 15 will demonstrate or graph the state bank's profitability as a whole in terms of net income and return on assets. The strength of our banks based on increasing capital levels, and then a pie chart that shows how a bank's balance sheet is typically distributed if all of the banks in Kansas were consolidated into one. I believe that it's very impressive that nearly 2/3 of our state's banks' assets are in loans fueling and enhancing our citizens' livelihoods and our state's economy. I deferred a moment ago to a summary of Camels ratings for our Kansas banks. Examination findings are highly confidential, so I can't disclose institutions' names or the towns in which they operate or the communities in which they operate. But page 16 summarizes the Kansas State Bank's Camels ratings for the last 5 years. Regrettably, in October of 2020, the one 5-rated bank in Kansas did fail. So the number of banks shrunk to 186 at the end of 2020. However, many of the problem banks did improve their condition during the fourth quarter of last year, so the number of problem banks statewide has declined at year end. As of the end of January, just last Friday, we had 8 problem banks that were rated 3, 4, or 5. 6 of the banks were 3-rated banks, which could be an indication of their continued improvement and hopefully on track to becoming a safe and sound bank, or troubles are beginning to percolate and they have become entered the troubled bank problem. One of the 8 banks is a 4-rated bank, and one in January of 2021 was, after following examination, will be a 5-rated bank. So we're working closely with the 3, 4, and 5-rated banks, and we're paying very, very close attention to the impact that several believe will appear later in 2021 as a result of the pandemic. Pages 17 through 20 speak for themselves, so in the interest of time, I'll not go over them in great detail. but they do disclose the conversions from national charters to state charters, de novo or new organized charters, applications for branching, mergers, acquisitions, purchases, and the likes thereof. The largest trust companies are our agencies, standing with our as well as the involvement of our staff in leadership roles in our industry. I would point out that of the 10 mergers, purchases, and acquisitions in the past 2 years that demonstrate my earlier points regarding the reduction of number of banks, that some of those were simply mergers of affiliates to realize efficiencies within an organization. So 3 banks of common ownership operating in 3 different communities merged into 1 bank, reducing the number of banks but having no impact on the total assets of that organization. In one case, 5 Kansas commonly owned banks became 1 in 2019. 3 Kansas commonly owned banks became 1 in 2020, just as 2 demonstrations or illustrations of that point. On page 20, I point out that our banking division is a nationally accredited financial regulator, a designation of which we are quite proud and have held for several years. Reaccreditation is currently underway and should be finished by May of this year, and we expect reaccreditation for another 5 years. In addition, for the first time in our history, we are seeking accreditation of our consumer and mortgage lending division. So speaking of the consumer and mortgage lending division, page 22 gives the 2 primary responsibilities of CML. If a business does not accept deposits, but is licensed to extend consumer credit, provide debt management services, transmit money for consumers, or provide mortgages to Kansans, it is regulated by our CML division. The division also provides grants funded by fines and penalties collected as a result of enforcement actions to organizations that provide consumer education and awareness activities and responds to consumer questions and concerns. I mentioned earlier that our banking division conducts several different types of examinations, but because the entities regulated by our CML division do not accept or hold deposits, their examinations are more compliance related as opposed to safety and soundness related. There are several federal laws and statutes these businesses must abide by, as well as the 4 primary state laws that are summarized on page 23. Once again, the number of players in this field is growing dramatically. In 2020 alone, the number of entities licensed in Kansas grew by a dramatic 16% to almost 12,500. These are licensees, entities and individuals licensed to loan money to consumers. Most of the growth, as should be no surprise, came in the mortgage origination sector, spurred by generationally low mortgage interest rates. So new home buyers or refinance mortgages. Managing this growth has posed challenges in both the sheer number of new players, but especially the fact that many of the new mortgage originators are entrepreneurs with little or limited knowledge of the industry, often recruited by nationwide internet-based mortgage lenders, common names that you hear every day advertising companies like Quicken Loans, Rocket Mortgage, and that sort of thing. Unlike banks, these lenders do not file quarterly reports and condition, only annual ones. Therefore, data for 2020 is not yet available, probably will be in late February or early March and can be shared at that time. But as evidenced by the graph on page 25, loan volume in Kansas is on a rapid increasing scale and is expected to continue to grow, certainly as long as interest rates remain low as they are now. Our CML division also supervises the rapidly expanding money transmitter industry. Kansas state law does not currently regulate virtual currencies, but it does regulate money transmitters like Western Union, MoneyGram, PayPal, Venmo, and the like. All of them recognizable businesses, and all of them under the broad scope segment of the industry frequently referred to as fintechs or financial technology firms. And that's going to continue to grow and will require some additional regulation as those grow and seek access to the banking payment system. The CML has the authority to take a range of enforcement actions in non-compliance circumstances. These actions include consumer restitution orders, assessment of fines, penalties, and even license revocation. Fines and penalties collected are in turn redistributed to Kansans in the form of consumer education efforts. The OSBC has provided over $5 million in grants since 1999 to schools and nonprofits supporting consumer financial education programs statewide. All of that $5 million funded by fines and penalties for noncompliance of consumer lenders. In 2020 alone, more than 18,000 students and consumers benefited from these grants through their education and nonprofit services. We partner with the Securities and Commissioner also to sponsor the Kansas Financial Scholars Essay Scholarship Contest, and pages 28 and 29 highlight these activities and these recipients. In conclusion, the OSBC receives inquiries regarding our regulated entities and provides answers whenever possible, as well as receive and attempt to resolve consumer complaints filed against these entities. We received over 1,500 inquiries and 190 specific complaints in 2020. We were able to resolve or close the matters or refer to the appropriate agencies 152 of those 190, and the other 38 remain open and in various stages of negotiations or reconciliations and resolution. The OSBC is staffed by a group of professionals. It is a premier agency that I am very proud of. It has a statewide and a nationwide respect and admiration by its peers and counterparts. And it is indeed my pleasure to serve as the chairman, or as the commissioner of the Office of the State Bank Commissioner. Thank you, Mr. Chairman. That concludes my remarks, but I readily stand for any questions.
Are there any questions for the commissioner? Representative Hoheisel?
Thank you, Mr. Chairman. Thank you, Commissioner, for that presentation. I do have a couple of questions and kind of bounce around here a little bit. First off, is it true that you only went into banking because you could not hit a curveball?
Actually, that is very true. I envisioned myself as being the starting shortstop for the Kansas City Royals until somebody threw a curveball to me and I just broke my shoelaces trying to get out of the way.
I share that problem as well. What do you see in the future on a state level as far as regulation with cryptocurrency and virtual currencies? Is there any role on a state level we could play in the regulation of that?
As of today, I think the answer is no, but that could change rapidly. So far, the move to grant bank charters to cryptocurrency firms or the fintechs has been focused at the Office of the Comptroller of Currency. It has not gone to the states yet. However, I do know, although I don't know the particulars, but I do know a senator from Nebraska has introduced or has indicated that they will introduce a regulation that would allow national chartered banks to hold Bitcoin currencies or virtual currencies on their balance sheet. So far, there hasn't been any state activity that I'm aware of other than conversation. and I'm not aware of any in Kansas.
Thank you for that. And one final question. What is the difference in the pros and cons of a bank wanting to join either the Federal Reserve or be under the state charter? What are some things, pros and cons, that they weigh on those decisions?
The all national banks must be a member of the Federal Reserve. It is an option for state banks to use service to become members of the Fed, to use those services of the Fed, but non-member banks get to use them as well. So it's just a personal bank and personal bank management and board decision. The difference, however, between being a national bank and a state bank, I think there are tremendous benefits of being a state bank. And first off, you're dealing with the state people, so people that are frankly not in Washington, but rather in Topeka, that there is a closer affiliation between my agency and the banks, regardless of their asset size. I think that you could find a number of bankers who would say that if you're not a big bank, there is no benefit because you lose your credibility or your standing in the national scenario. For example, the phrase "too big to fail" that we heard so much 10 years ago during the recession, oftentimes is followed with "or too little to matter." So at a state bank, especially in Kansas, you matter, regardless if you're the Walton State Bank at $10 million in assets or Cross First Bank at $5.5 billion in assets.
Thank you for that, Mr. Commissioner, and thank you, Mr. Chairman.
Representative Land.
Thank you, Mr. Chair. I have a question. On page 15, you have the pie graph, and you have 63% of the asset is in loans, and you said that that's a good thing. Can you help me understand? I would think that would be more risk.
That's a very good point. That there is certainly risk in loaning money, but that's what banks do. They loan money so people can enhance their livelihoods and start businesses, maintain businesses, buy homes, buy cars, that sort of thing. So managing the risk is critically important. And if bankers do a poor job of managing that risk, they become a problem bank and they have more work cut out for them. So that's a very good point, that there is risk, but it's manageable risk. And having the liquidity represented by the other asset categories helps the banks maintain profitability and serve the needs of their communities.
Thank you. If I may, one more. So what would be the optimum percentage of loans that a bank would shoot for?
Again, it's the decision of the bank's board and management and the shareholders as to how much risk they want to put in their institution. Typically, we see them at 60 to 75% in a comfortable range. I've seen them as high as 80, 90%, and there is the appropriate level of staffing, reserves, and monitoring, and that sort of thing. Again, it depends too on the time of year that you might be in. For example, a bank that has a significant ag influence, as Kansas banks do, are going to see the balance sheet, their loan portfolios grow and decline as a result of the ag community or the ag cycle. Is it harvest time or is it planting time? Is, that sort of thing. So there's so many variances, but it does fall back to the risk tolerance of the management and the board and shareholders of the bank.
Okay, thank you, Mr. Chair.
Any other questions? Representative Burkamp.
Thank you, Mr. Chairman. Thanks for the presentation. If a bank is identified as a problem institution, is there any notification that goes out to its members, or is it just not known until a bank goes under if they have an issue?
It progresses. The first step in a problem institution is likely to be a board resolution that simply says problems have been identified, we're bringing it to the board's attention to address. Second step would be a memorandum of understanding where there are specific items identified as problems and specific steps to cure, as well as a time frame to cure. Those two things are confidential between the regulator and the bank's board. The public document becomes when it is a consent order, and that is almost always, in fact, I know of no exceptions that the consent order is instituted by the federal regulator in conjunction with the state regulator. So in our case, it would be the FDIC and the OSBC issuing a consent order. Those are public documents, and they are posted on the FDIC's website. So that is a specific process to resolve issues that are causing the bank to be rated. Typically, you'll see a consent order when there is a 4-rated bank, in all cases a 5-rated bank, but 4-rated banks, and on occasion 3-rated banks if the decline is gone pretty rapidly.
Thank you.
Any other questions? I would like to point out that the commissioner is making special efforts to be with us today because he and his wife are actually on the way to Alabama, and he is looks like not doing it from the road, but doing it from the hotel this morning, and is waiting to get on the road. But appreciate you doing that for us, Commissioner Herndon, this morning to visit with us.
It is my pleasure. Thank you very much.
I have a couple questions, and then we'll see if there's any more. I was wondering, have the changes that you've made during the pandemic to examine banks, to your mortgage lenders, the consumer lenders, any changes you made, you think they will continue on going forward because they've turned out to save time and money and accomplish the same thing that you were doing?
Yes, I have been overjoyed with the results of our agency working remotely as a result of the pandemic. Started a year ago. You know, just in order to be prepared, we had told everybody that we were going to practice, just in case we needed to. We were going to practice the first week of February in 2020 to work remotely. We were just to, you know, plan for the worst, hope for the best kind of thing. Little did we know that we would be working remotely for a year. Little did we know that banks would be requesting to close their offices, their lobbies, their drive-ins to protect their staff, their customers, and their community. It has gone tremendously well to conduct examinations remotely. Our staff enjoys the opportunity. The efficiencies have stayed extremely high. It is turned into almost a job perk or a job retention feature that we can say because we are so good at it, and that is directly attributed to the leadership and preparation that our information technology staff provided in terms of making certain that everybody could do. By its very nature, bank examiners work remotely. They don't work in the office, they work in the bank. This time was a little bit different because the bankers didn't want us to come in either. So things that were done traditionally on-site were done off-site. Exam turnaround times continued the same. or improved. Results, efficiencies, thoroughness, and all of that was not hindered. So I see the future holding a continued opportunity for remote bank examinations, or substantially remote bank examinations.
So, I mean, I was somewhat surprised to see in the pandemic that you have had some banks improve their condition, at which that's positive. But do you see anything coming out of the pandemic if some of the programs start to go away, whether it's the PPP loans or others, that you may have issues that you're preparing to look at going forward?
Yes, once again, we prepare for the worst and hope for the best. It's a matter of time because of the examination cycle and the quarterly call report cycle. We basically look at things as they have happened instead of what's going to happen, but we do prepare for that. And there has to be some sort, in my opinion, some sort of adverse reaction to it. If 33% of small businesses are suffering and failing, as evidenced by the PPP, people that were endorsing that or parading that as a salvation, but just by reading press reports, and you see the stresses on the small business and the unemployment numbers and that sort of thing, the moratorium or the prohibition on foreclosures and evictions, great for the tenant, absolutely great for the tenant. But the landlord has to service that debt from some source, and if he can't get rent, how's he going to do that? Same thing if you own an office building and businesses move to a remote. Is that going to have an impact on it? Who knows? And then in Kansas, with the ag influence, the actions not by the farmer or his banker, but the geopolitical actions, the stroke of the pen legislation, things of trade wars and that sort of thing, has, nobody called the banker or nobody called the farmer and said, what happens to your crop if we impose these actions against it? So there's always going to be some sort of risk and some sort of reaction, and we are hoping for the best, but preparing that there will be worse that will begin to show its heads later in 2021 and throughout the coming years.
So one final question for me on the other agencies that you work with, the mortgage lenders and the consumer lenders. What have you seen during the pandemic? Any increase in issues over normal that you've had? And also, what do you see coming out in those two industries, the mortgage lenders and the consumer lenders, the payday companies and all of that?
Entrepreneurship and education, I think, are the two biggest ones. When we take a look at an applicant for to obtain a license, for example, to become a mortgage lender, and you look at the person's background, it is not in finance. It is not in an accounting. It's typically in something that has nothing to do with that. I looked at one a couple of weeks ago where the new mortgage loan applicant, his previous experience was as several years as a chiropractor. But he can make more money originating mortgages in this environment than he can being a chiropractor. We see others who are sales-oriented people, who are technology-oriented people, who, again, are very, very adept at doing what they do, but they have not loaned money before. And they're not loaning money, their money now. They are originating loans for loans being sold on the secondary market. So the risk stays off of their balance sheet and moves on. So they'll continue to do that. In terms of payday lenders, I think that that's going to continue its evolution from the brick and mortar storefront to internet-based. I think there's going to be other kinds of ways where people can attempt to extend credit to consumers who are perhaps they are the lender of last resort, perhaps they are the lender of least resistance or paperwork. The days of taking 2 or 3 weeks or 60 days to close a mortgage loan are history. You have to be so nimble now, and buyers expect to get approvals or get decisions instantly so that they can go out and be armed to, and sellers do too. Sellers expect their buyers to be approved and ready to close on a transaction.
Final, looking at the payday industry and all, and probably the turnaround of the CFPB, anything that you're looking for to come out of the CFPB under the Biden administration?
And they have, the Biden administration, the CFPB, and Congress, and all have made it very, very clear that their intent is to reverse the relaxation of regulations that have taken place in the previous administration, and either to reinstate or create new regulations. So that will undoubtedly affect the payday lending industry as well as all other depository and non-depository lenders.
Any other questions for the commissioner?
Mr. Chairman, I had a question.
I heard someone say they have a question.
Yes,
Oh, Representative Weigel?
I have a question. Mr. Commissioner, thank you for your presentation. You mentioned that one bank failed in 2020. Is that correct?
Yes, it is.
Did you happen to mention where that was?
The bank was the Almena State Bank in Almena, Kansas, Norton County.
So northwest part of the state, is that correct?
Yes.
Was there any indication before that bank failed to your office that they were in financial straits or that they were possibly going to fail?
Yes,
had
there
they
was.
indicated that to you? And what was the response?
In this particular case, the bank had been suffering some severe adverse conditions based on poor decisions in bank management. It had, in my opinion, it did not have anything to do with the pandemic because the bank's condition was very poor well before anybody even knew about a pandemic. This bank was subject to some bad loans that went bad. It was subject to the victim of a very, very large kiting scheme that it was unable to sustain, and nor was it able to recapitalize itself. So continued operating losses put the bank, they ran out of capital. So we did close the bank in October. It was closed on a Friday afternoon. It reopened Monday morning as a branch. There were, as I recall, there were 4 reasonable bids. The FDIC handled the resolution, so I didn't have access to all of the totals. But it was the successful buyer of the failed institution was the Equity Bank out of Andover, Kansas, and it turned it into a branch of Equity Bank on Monday morning after it failed on Friday afternoon. But again, the bank was in severe duress well before the pandemic based on on non-performing loans, the check kiting and the depletion of its capital.
Was the banking commissioner's office aware of that, of these
Oh, yes.
check kiting and bad loans prior
Yes.
to?
We had identified in several previous examinations, both by us and the FDIC, the specific loans that were criticized, the risk of loss associated with those loans, the kiting episode when it was discovered, the loss that the bank was had to suffer for that, and the chances of recovery of those funds were doubtful. Um, so yes, we did have the bank had been on the troubled list long before I arrived a year and a half ago, and had not taken the steps appropriate to address the items in the consent order. So there was just several points of non-compliance, um, several instances of poor credit underwriting and that sort of thing that led to its ultimate failure.
All right, thank you, sir, and thank you, Mr. Chairman.
Other questions for the commissioner before he can hit the road? Hoheisel, do you see any? I don't either. Looks like we've gotten all the questions asked and appreciate your presentation. We've got a lot better idea, I think, for all of us, what your office has to do, and it's a very important job in Kansas. So thank you for being here, and be safe on the rest of your trip.
Thank you, Mr. Chairman. Thank you, committee
And thank
members.
your wife for us too, for
I will.
holding up a little bit here.
I will. She's anxious to see her sister, so I will tell her that. Thank you very much.
Thank you.
Mm.
Representative Hoheisel.
Thank you, Mr. Chair. On the subject of bank closings, there is on YouTube a story from a few years ago that 60 Minutes did, and actually takes you behind the scenes of a bank closing and the whole process from start to end, if anybody's curious on how that works. It's a pretty good, I think it was on 60 Minutes. So you can just Google bank failure 60 Minutes and bring it up. It's about 15 minutes, but it's pretty cool to see like the whole process of the bank failing and getting it open the very next day.
And it's thankfully, it's one that I've never had to experience, so, in the years. So that's always positive. One piece of housekeeping that I need to go back on under our bill introductions, we want to reverse the bill introduction on the first-time homebuyer RS 0664. Our reviser said there's a couple issues that we need to address, and we'll come back Wednesday with that on the homebuyer because it has been a tax bill written, and so we're going to go back and make sure we've got everything right on that. So, Rich, if you could note that bill, we'll reverse it and we'll deal with it on probably Wednesday. On Wednesday, which is our next committee meeting, we do have a look into the future of rural Kansas. Chris Harris, the Senior Program Officer of the Ewing Marion Kaufman Foundation, and he is submitting a number of pieces of material for us, and he's going to go over a case study that the Kauffman Foundation had in Iowa, plus some other, I think that will be kind of enlightening things for us to look at and think about. And so some of that, if it hasn't come out to you already, will. And so take a chance to look through that a little bit. And the one article that sent you right at the first of the session that Chris had written would be a good one to read for Wednesday, because this will kind of give us some background of what we want to do with the rural development portion of our session. And I think the bill that hopefully will be ready to go here shortly on a revamp of the Rural Opportunity Zone program might be a good first step that we be able to take to look at and see what we can potentially do with it. But it's had a committee working on it all summer. I had a conversation with our Lieutenant Governor on Friday about the bill because it's has Commerce Department ties, and he's also with the Commerce Department, head of it, and he has indicated that he thinks that we should have it ready for introduction here maybe Wednesday or Monday. So that'll give us something there. So Chris Harris will be a great lead-in. So please be ready with some questions for him. Any other items for the good of the committee this morning? Representative Hoheisel?
Thank you, Mr. Chair. Just a reminder to the committee, today is the last day to request bill drafts from the reviser, individual bill drafts. So if you have anything that you guys want to individually introduce, today is the last day to request that from the reviser.
Thank you. Appreciate that, Representative Hoheisel. And if nothing else, we'll be adjourned.